Hello, this is Books of the Stock Market. How's everyone doing? As for me, I almost got fired from my job because it looked like I manipulated data. So I asked a coworker of mine if I was allowed to change my data since I incorrectly inputted a value in this program. I asked my coworker if I was allowed to change the input because I was relatively new to this position, and the coworker said it was fine. So I changed it, but I remembered that if you change data, it would leave an error in the audit trail. So I asked another coworker about this situation, and this coworker said I was not allowed to change the data. So I reverted the change back to the original value. At this point, the audit trail would show that I changed my input 2 times. Anyways, this got caught during a review process and was sent all the way up to HR because my supervisor was accusing me of changing data. And HR eventually got back and said that since the conversations that were taking place between the two different coworkers were logged in a Microsoft's team chat, they thought that I was being transparent enough to prove that I was not manipulating data. But the crappy part of all of this is that I have to get retrained, which sucks. Anyways, with that out of the way, let's talk about today's topic. Today, we will be talking about long-term charts and when to use them. Towards the end of the video, we'll be talking about Ethereum as it is an asset that follows the trend lines drawn on long-term charts pretty well. So let's start off with why we use long-term charts. We use long-term charts because they provide a perspective in market trends that is different from the daily bar charts. As they provide like a whole different perspective, they should not be used for short-term trading purposes such as trying to find entry and exit points. Instead, they should be used for looking at the big picture or quote-unquote the macro trends. Since long-term charts have a time period of months and years, how do we get long-term charts for futures? As described in my video that explains futures, which I'll link in the comment section below, futures have an expiration date. And on average, a futures contract has a lifespan of around a year. So how do we make long-term charts with futures expiring within a year? Traders have developed continuation charts where when one contract expires, the next contract in line will be used. This means that the next contract that represents the same strike but expires one expiration date later will be used. However, using this technique has some drawbacks. For instance, there can be a premium or the contract can be really discounted at the point of expiration. This means when the contract expires, the price can drop or jump when switching to the next contract in line. To combat this problem, there are some alternatives to the continuation chart. For instance, some traders do not plot the nearest contract a month or two from the expiration date. Instead, they will use a contract that has more time left on the expiration. Another way is to use the value of the contract when its open interest is at its highest. Some traders believe this is the true value of the contract. The last popular way is to average the price of several contracts together. Moving away from futures, let's talk about long-term trends and randomness. If a long-term trend line is drawn properly, they last for years and don't need to be adapted often. This disputes the random walk theory, which is a concept that I explained before in my videos. I'll link that video in the comment section below, but in short, the random walk theory states that history and present price movements are independent of one another, and that history has no impact on present since price action is truly random. However, the long-term trend lines that are still intact even after 20 years dispute this fact. Next, all reversal patterns that I covered in previous videos apply to long-term charts. For instance, double tops and bottoms, head and shoulders, and triangles are seen often on long-term charts. Weekly and monthly reversals are also seen very often. For instance, if a new monthly high was formed but it closes below the previous month's close, then price action is signaling a reversal or at least the trend is weakening. Next, let's talk about a potential problem. How do we adjust for inflation when looking at very long time frames? Well, the author of the book, John J. Murphy, states that you do not need to adjust for inflation as the market already makes those adjustments. For instance, if there is a rising or falling dollar, it causes the stock to fall and rise proportionally. Therefore, it can be said that price action discounts everything, even inflation. Now that we know how and when to use long-term charts, what should the process of doing technical analysis look like? When doing technical analysis, you must start with the long-term chart and then gradually shorten your time frame. This is because long-term charts provide trend lines that do not need to be changed very often as they're relatively more accurate. This in turn gives you a general idea of what your short-term trend lines should look like, as long-term trend lines define the areas of major support and resistance. So when you're doing technical analysis, you just start off with a 20-year chart and then move your way down to a daily bar chart. Let's move on to an example. Here we have the Dow Jones Industrial Average, which is one of the oldest indices. We're looking at the stock in the monthly time frame, so each candlestick represents a month. We see that this trend line has been holding since around the early 1930s. Here we see every time this line acted as resistance. Likewise, this is every time this line acted as support. As you can see, this trend line has been very useful. So what would happen if Dow fell all the way to this blue line? Then we should see this line act as an area of support. Here we see the Dow Jones Industrial Average again. This is again on the monthly time frame, and here we see a horizontal trend line, which is a type of line that I usually make when using long-term charts. I try to find good horizontal trend lines on long-term charts because they're generally stronger than regular trend lines. Furthermore, since they are drawn on the long-term chart, this adds another layer of strength. For instance, if you see on January 3rd, 1966, this line acted as a resistance. Likewise, it acted as a resistance on November 1st, 1968. It once again acted as a resistance on January 1st, 1973, as well as on September 1st, 1976. This continues until March 2nd, 1981. But on May 1st, 1984, this line gets broken, and the stock pushes upwards. You can see in the green circle that once the price broke, it briefly tested the blue resistance line, which now has become support. Since the blue support line held, the stock moved from here. Next, we have Ethereum, which makes up a pretty big chunk of my portfolio. Crypto these past months has been giving me phenomenal returns, and they straight up beat the S&P 500. Anyways, as you can see, I have a lot of horizontal trend lines, and like I said before, I mainly use horizontal trend lines when looking at long-term charts as they give me a good overview of where local resistance and support are at. Here we see Ethereum on the weekly chart, and I have 6 horizontal trend lines. Let's start off with line 1. We see that this line acted as a resistance here and here. Once it broke through, it went to all-time highs before falling back to this point where it acted as support. It tested this area again, and it couldn't hold, and Ethereum fell. We see that it has now become resistance, and it continues to be resistance until we broke out and started consolidating here. We see that this line did not hold as support, but after continuously testing the line, it eventually broke out. Here, we see that this line first acted as resistance, but after testing that resistance, it broke through. Moving from there, we see that this area could not hold as support and price dropped to line 1, which is the next key level. As you can see, horizontal trend lines on long-term charts are very effective in predicting price action. We then started consolidating right below line 2. After failing to make that line, we broke and made new lows as line 1 could not hold as well. In recent months, we recently tested this line, but very briefly, and it got rejected right away. However, we see that we broke out of this line in early December. This line is now a support level, and all stop losses should be put here, which is another reason why I use horizontal trend lines as they provide a good place to put your stop losses. Line 3 is the next key level. Here we see that price is consolidating and is holding as a resistance level. Although this line is not the best horizontal line, it does have some history of price consolidating near here. Lines 4, 5, 6 are future key levels that need to be watched carefully so that we can predict price. We see that line 4 is the next key level, and as we saw, this line acted as an area of consolidation and resistance. Line 5 is not the strongest horizontal level as price kind of held this area as support. Since this level is not that strong, we should predict that if price reaches near this level, it should easily break through it. Line 6 is the all-time high of Ethereum. And although it only has 1 point, it is an important level as it is an all-time high, and there are some psychological barriers that come at all-time highs. Well, that's it for this video. I hope everyone learned as much as I did reading a book, as that's the whole point of this channel. In this video, I talked about long-term charts. The next video will be talking about moving averages, so if you don't want to miss out on these topics, please subscribe to the channel. If you enjoyed this video and felt like you learned something new, Like this video as it really supports the channel. If you have any questions, leave a comment below and I'll try my best to answer all the questions. Well, this is Books of the Stock Market, and I'll see you guys next Wednesday at 3 p.m. Central Time. Thanks.